afternoon from Los Angeles. It's Alyssa Corum here, and today on Stock Market Today, we have a very special guest co-host, Arusha Pires. He is the manager of our MarketSmith platform, so thanks for being our special co-host today.
Thanks for having me, Alyssa.
Yeah, so you may have heard his voice or even seen his face before. We have a podcast. A new episode just dropped today, but we'll get to more of that later. First, let's talk about what we're going to talk about today. We're going to go over the major indexes. We're also going to take a look at Atlassian and Union Pacific, and then finish off with a look at the new episode. How's that sound?
Sounds good.
Okay, so first let's take a look at the major indexes. We did finish up across the board. The Nasdaq edging into positive territory. The Dow led the gains up 0.4%. Then we also had the S&P 500 close up 0.2%. So the Nasdaq holding in there, holding around that 8,000 level.
Yeah, and this morning it was a little bit scary.
Right.
And especially the last couple of days, we had a market sell-off, and our stocks are starting to sell off a little bit more. But just like the last few months, this market's been resilient. Mm-hmm. It starts to sell off a little bit, and then we start to find buyers. So far, so good. It's been a good rally so far. Yeah. But that being said, we're near new highs, and the market is entitled to taking some kind of break and consolidating these amazing gains that it's had since the beginning of the year.
Exactly, and it's important to take things day by day and not really try to make too many predictions, get too bearish too quick, like, this morning.
Exactly.
Things turned around by the end of the day.
Yeah, a lot of times for stocks, it's you buy right, and that takes care of most of your issues right there.
All right, well, let's get into a couple of stocks. First, we want to talk about Atlassian, which fell hard after issuing its quarterly report, closed the day down about 8.3% in heavy volume. The quarterly numbers looked really good, strong earnings growth, but it was that profit guidance that was a little bit of a disappointment to investors.
Yeah, listen, it's always about the guidance. and it's Wall Street is what have you done for me lately? And so unfortunately, they guided a little bit lower, and so Wall Street punished the stock. Now, this is a little bit concerning because this is part of the software group. The software group has been the strongest group in this rally, and Atlassian was one of the first stocks to break out in the rally. And so when you see this one gapping down, now you start thinking, okay, is this going to spread throughout the rest of the group?
And so for those who had a position in Atlassian heading into this earnings report, what should they do now? Is this a clear sell signal here?
Yeah, so we consider this a sell signal. It's a sell below the 50-day moving average on heavy volume. Now, a lot of times, so it's a warning signal, like to say, because everyone's going to have bought the stock at a little bit different place. If you're only up a few percent, now you want to be more concerned. If you're up 100%, you have a little bit more luxury to see if you can ride it out. But that being said, a sell-off like this, a lot of times the stock just needs a little bit of a break, and we like to let the stocks prove themselves again before getting back in them.
Exactly. Well, this is one scenario that can happen after an earnings report, but the opposite scenario we are seeing today with Union Pacific, which gained about 4.3% in heavy volume on its quarterly report, an earnings beat here, and we have this stock breaking out of a base on the results.
Yep, it's breaking out. We also call this a breakaway gap on earnings. And sometimes, the reason is I like gap ups because you can see the rotation. So the railroads will be an interesting group to watch this quarter to see if other railroads start to follow through. There might be more money going into railroads, and there are times during a market cycle where railroads are in favor. So maybe this is their time.
Exactly. It can't always be tech all the time or software all the time, like we just saw with Atlassian. So it will be interesting to see if others in this group will be able to react the same way. And this is a great segue into our podcast because this week was all about earnings gaps. But first, tell our audience, if they haven't watched the podcast or listened to the podcast before, what do you guys normally do every week?
Well, we have 3 segments in the podcast. So we like to talk about the current market, kind of like this. And then we'll talk about an investing lesson. And I think that probably for most listeners, that will be the most valuable part of it because this will help you get through the learning curve. And then we generally like to end the episode on a few current stocks that are coming up on our radar.
Yeah, so a great combination of the education and timely analysis. I enjoy. I mean, I'm participating in the production of it. So
she's the one behind the scenes telling us what to
behind
do.
the curtain.
Exactly.
But anyway, so this week is all about earnings gaps. So a very timely lesson here. So what is the benefit of looking at these earnings gaps?
The way I look at it, the market these days is almost a quarter-to-quarter type of game. And with earnings gaps, especially like a Union Pacific, if you like that story, it is breaking out. It is giving you a chance to get into it. Now you can buy it at this point, and you have a whole quarter to see if you can build up a cushion on it. You don't have to worry about that big pitfall of earnings. Yeah. And so I like going by quarter to quarter because now I have a whole quarter. Now if I'm up, I've built a position, I'm up maybe 10% on it going to next earnings quarter. Now if it gets hit, at least I'm giving back profit at that point. So I like just giving it those 13 weeks to see if it can really build a position.
Well, some might think it might be counterintuitive to buy a stock when it's gapping up so much. I mean, Xilinx, it was pretty big on its quarterly report, but then after that, there was a lot of momentum.
Yeah, it's worked out pretty well for Xilinx. I think it's up like 40% since the last earnings report, which is similar to this, where it was a breakaway gap on earnings. Now, I'm not saying Union Pacific is going to do that. They're completely different companies. But with Xilinx, they excited Wall Street. They guided higher. They have a great story, and Wall Street found themselves that they didn't have enough shares of the stock. And so what you've seen over this last quarters, they're trying to get enough. They're trying to build more of a position in their portfolios with Xilinx.
Yeah, and this week you guys go over 3 stocks that could have the potential to have maybe perhaps the next Xilinx-like move this earnings season.
Right, and it's kind of funny to think, but a vacuum cleaner could be a great stock idea. And so we're talking about iRobot here. But they're well positioned within the whole AI or the smart home kind of trend that's happening. Or even think about Alexa with you're giving commands. You can actually give commands to your vacuum apparently.
Well, for a more detailed look at iRobot and other stocks to watch this earnings season and a detailed look on the earnings gap strategies, make sure you check out the podcast. Go to investors.com/podcast. The new episode just dropped today. Thanks so much for joining us on here, Arusha.
Thanks for having me, Alyssa.
All right, and thank you all for watching. Be sure you're heading to investors.com for all the latest stock news and analysis. You can also check out all of our content across social media on Facebook, Instagram, YouTube, and Twitter. Lots of great content to stay up to date on all the latest. Thanks for watching, everyone, and we'll see you right back here on Monday. Have a great long weekend.